Look, I said to one of the presentations last week after our results, we APA probably got to be the most boring company on the planet. This year we've really just done more of the same being more of the same for the last 16 years. Just in FY16, just did a bit more of it. I'm looking at an A3 sheet with the graphs and whatever on it, so you see everything's going upward to the right. A bit of a bump up in 16, which was I'm looking at the EBITDA, for example, really driven by a full-year impact of the Wallumbilla gas pipeline. You don't go out and buy a $6 billion pipeline and not expect to see some positivity in your results. So that's the driver there. Distributions, they're up 9%, and unlike, I'd say, most of the Aussie corporates these days who give no guidance on anything, let alone dividends, we've I'll say it's a forecast, but we expect to increase those distributions by another around 5% for FY17. So go back over the last couple of years and you certainly see us having delivered on what we've always said we would do. As in the growth projects, acquisitions, we get the money in the back door, and when we're comfortable that it can stay there, then we'll start passing out the front door via distribution. So I'd say over the last couple of years, our distribution growth, not that it drives APA, but you'll just make the observations, probably well in excess of 15% over those couple of years. Whilst talking about distributions, we're bog boring. We do things for the long term, so you see an increase in distributions. That is saying that we expect that to be sustainable over the very long term. And indeed, talking about the long term, there's nothing in front of the business that concerns us regarding the growth prospects, which is why this year we were a little bit more forthcoming in respect of what are the growth prospects in front of the company. Certainly acknowledge that it's pretty difficult conditions with out there with some of our customers, no question about that. But given we've got a business across the country, we continue to see those growth prospects. We put a fair bit of work into looking at those growth prospects early in the year when we did our annual strategy update. We identified at least $1.5 billion worth of growth prospects domestically here, which we think are achievable, notwithstanding that some of those may have some competition for them, but those projects are indeed up against our pipelines or expanding our complementary assets. Which leads me to another point. We've been asked pretty routinely these days around growth, given that some companies don't have the growth prospects. It's interesting, over the last 6 or 7 years, APA, whilst it's a pipeline business, and pipeline business is what I do, as in that's my core skills. I focused on that for my career. Nevertheless, we have been pretty savvy, if I can modestly say that myself. Over the last 6 or 7 years, we have grown ourselves into be a large-scale gas-fired power generator, build, own, operator. We own, operate wind farms. We're right across that. We're into renewables. We are large-scale gas processors. We are large-scale gas storage players. So when you look at the landscape of activities that are in those sectors, particularly all things renewable, we think there's plenty of avenues for APA to grow. And when I say grow, this is just growing our existing business now. It's not APA saying, well, we've got no more growth in pipelines, we're going to go into brain surgery. It's just we are growing our core skills. And we also make the point, we are looking at the US. I've said for the last 5 or 6 years now that management has a mandate from the board to keep a watching brief look for overseas investment. And I've said for the last 6 or 7 years that as we have done that, there's been no jurisdiction that we would be comfortable in having a look at, or i.e. investing in, that we could identify APA would have a competitive advantage there against the locals. The only point I make this year is that I'm sure you're aware the US midstream industry just simply crashed. There's too much gas, too much infrastructure, boom bust cycle happening, and investors over there are pretty shy. APA's got no shortage of balance sheet strength, so rather than have accusations tossed at us, as in there's half a dozen APA people ensconced over in the US for a few weeks looking at stuff and reading about it in the paper. What are you doing? We're just saying up front, we will have a look. And that's, we haven't even gone there yet, so we are just having a look. Obviously, that look will turn into a fulsome report, and we'll see what the opportunities are there, and we'll come back and update the market in due course. But just to put every one of these, I'm not going to give someone a checkbook and say, don't come back until you bought something. So nothing's going to happen in FY17, and indeed may not even happen in FY18. But anyway, APA always been upfront, transparent, no surprise with us.